Hello all, and welcome to today's RMI webinar on 6 ways to eliminate the need for newly mined battery minerals. A quick reminder, this webinar is being recorded and it will be posted on RMI's event page within 24 hours of this event. We'll send that recording out to everybody who registered, along with some other resources and links. Thanks again for joining us, and we'll get started soon as we get everyone to join. All right, we'll get started momentarily. We are creeping up towards 100 people on this call. Thank you all for joining us. And all right, we will take a minute and get started. All right, hello all. Welcome again to today's RMI webinar on 6 ways to eliminate the need for newly mined battery minerals. This is being recorded. We will post the recording on RMI's event page within 24 hours. And we'll also send it out to everybody who registered via email, along with other resources and links. So thanks again for joining us. Next slide. All right, here is the agenda for our hour together. We'll soon hear from Ben Welter, principal on RMI's strategy team, who will share the findings of our recent report on the battery mineral loop. We'll then hear more insights from RMI's battery circular economy initiative, with EJ Klock-McCook, principal on the carbon-free transportation team. We'll end with robust time for Q&A, and you can send questions at any time through the Q&A function on the bottom of your screen in the Zoom panel. We'll get to as many as we can because we know you all may have a lot. And with that, I'll hand it to Dan to share the findings of our latest report. Dan, over to you.
Excellent. Thank you, Will. And thank you all for joining us this afternoon. We'll be running through our latest findings of our report, the Battery Mineral Loop, which came out a few weeks ago. First, we'll just tee it up a little bit by talking about the battery mineral challenge, what's actually the challenge ahead of us when we talk about battery minerals. We'll talk about the continued trend as we see the world developing towards more circularity. Then an accelerated trend scenario where we actually see advanced action taken on battery circularity, efficiency, and innovation. And then I'll talk a little bit about the innovations, the implications of meeting the battery mineral challenge, at which point I will hand it off to EJ to actually sort of get down on the ground and talk about what we can actually do right now to get on the right track. So let's dive into the first page. As we outlined in a previous research paper from about half a year ago, battery demand is now decidedly on an S-curve. It's growing incredibly rapidly. It used to come from electronics battery demand. It's now decidedly shifted into automotive, cars, light trucks, heavy trucks, buses. It's all starting to go along S-curve growth. And that means a rapid exponential growth of battery demand. Stationary storage, the latest joiner to the race as well. Battery demand is growing very rapidly. And so the way that we see it, we have two scenarios that can unfold here. It's either going to go fast with batteries or faster. And that means that the roughly 1 terawatt hours per year today in battery demand will rise to something between 5.5 and 8 by 2030 and approach 12 terawatt hours per year by 2040, 2050. So battery demand is growing incredibly rapidly. And so as the battery demand grows, we'll see on the next page, the minerals that go into batteries, of course, grow very rapidly as well. We're looking here at the IEA outlook and the battery mineral demand growth projected through to 2040. And we see rapid growth of minerals across the board. And the share of the battery contribution of this growth is really significant. In our report, we mainly focus on the first 3 items here: lithium, cobalt, and nickel, as those are the key minerals where batteries contribute to the growth in mineral demand. So mineral demand is growing really rapidly, but not all of this mineral demand needs to be mined. And as we go to the next page, we outline 6 solutions, 6 alternatives to actually mining for minerals. And those 6 are on this page from left to right. First, changing chemistries. Going towards chemistries that just use fewer minerals or less critical minerals can reduce mineral demand. Higher energy density batteries. You're just using less of a material to still make the same battery results in a reduction in mineral demand. course, at the end of the life of a battery, recycling this content of a battery, instead of then mining new minerals, you can just use recycled content to insert back into the value chain. That's where the loop comes from in battery mineral loop. Of course, before we even think about recycling, first thinking about reusing and extending the lifetime of a battery for as long as we can, such that we don't have to mine new minerals and just keep using the same battery. But it doesn't stop there. There are two more levers that are often forgotten in this story, which are efficiency levers. First is more efficient vehicles, actually streamlining your vehicles, making them more efficient. Think of things like drag and other factors that you can reduce in a vehicle. Less energy per kilometer needed means a smaller battery can get you further in a car, which means you need fewer minerals to actually get a car from A to B. And talking about cars, efficient mobility, maybe we don't even need cars. Maybe we can actually focus on more better urban planning, better logistics, better public transport, such that we can actually shift from cars to buses. And instead of have 40, 50 cars with big batteries in them, one or two buses that can do exactly the same job. And again, therefore have less mineral demand. So these 6 levers, this is not just sort of wishful thinking of like what are sort of theoretical alternatives to mining. The first 3 of these, changing chemistries, higher energy density, and recycling, have already made a big dent. And this is what we'll see on the next page. These 3 solutions have already reduced lithium, nickel, and cobalt demand by something of 25 to 50% over time. So lithium demand today would be 60% higher were it not for already like existing chemistry changes, density improvements, and recycling. Nickel and cobalt would even be more stunning. It's almost more than twice as much mineral demand today without these levers. So change is already underway. And it's interesting to see, as we'll see on the next page, is that experts keep underestimating how fast this transition is going. So if we move to the next page, we see a very interesting trend where time and again, experts keep getting caught out by how fast battery demand is growing. And we see here some BNEF forecasts that between the 2019 and 2023 forecasts for battery demand in 2030, it's almost doubled. So battery demand is growing much faster than people are actually thinking. But at the same time, we see that the forecast for cobalt has actually halved, and the forecast for lithium demand has only grown by about 30%. So what is going on there is really, and that's what we highlight here on the right side, is that the forecast intensity of cobalt in this case and nickel has improved by a factor 3.6, factor 1.4 for lithium, 3.6 for cobalt in the 2023 forecast compared to 2019. Experts keep getting surprised. That's the story in short. Keep getting surprised by how fast change is actually going. So we move towards the next page. Let's dive into the first section. So what does it mean if these 3 drivers of change actually continue into the future? We'll find here a surprising result, which is that battery minerals will peak within a decade. So let's dive in. There's the wrong linear view. So we have this fast and faster scenario for batteries. And that means that you get this rapid exponential curve towards roughly 12 terawatt hours of battery demand per year. And so the wrong linear view would be that most people kind of intuitively have is therefore lithium, cobalt, and nickel demand follow kind of today's demand along that same S-curve. That's not the case because these 3 continued drivers of change curb battery demand. First, let's look at chemistry change on the next page. Chemistry change is evolving very rapidly. And so under a linear baseline, under sort of this linear assumption, you would assume that we've kind of reached our limits in battery innovation and chemistries. Obviously, that's not the case. Under the continued trend, battery chemistries continue to evolve as they have over the past decade. They will continue to evolve into denser and more diverse chemistries. And that means, just taking that into account, that means that we move from this linear baseline down significantly for nickel, lithium, and cobalt. We already see a significant reduction in overall demand. On top of that, on the next page, we have, of course, the increasing energy density over time. So on the left side here, we show the energy density rise as a function of battery deployment. As we learn more on how to make batteries, actually batteries tend to become more and more energy dense as we start to understand how to make these battery cells more compact. And so under a linear baseline, it would kind of implicitly assume no further learning on density rates. In reality, that is 6%. So for every doubling, energy density roughly rises by 6%. And so part of that is because of chemistry. Part of that is because of the actual, within a chemistry group, batteries getting more dense. All in all, when we combine this, again, we see nickel, lithium, and cobalt demand going down even further. Now let's go to the third lever on the next page, the recycling. Common knowledge would have it that recycling is actually quite small today. The number that we often see quoted is 5% recycling collection rate and low collection rate, recovery rates of recycling processes as well. This is not true. Collection rates actually today tend to be higher than 50% across the world, depending on the sector. As you can see here, collection rates can actually be incredibly high. And recovery rates can even be higher, 80% or higher for lithium, nickel, and cobalt. And so what that means is if we just continue our current operations of recycling and we scale up recycling, we see that nickel, lithium, and cobalt demand drops even further. Now, a few notes on recycling. We'll get a little bit more into that, and EJ will say some things on that in the next section. But on the next page, maybe a little bit of a hint of what's happening in recycling at the moment is it's early days. Recycling is of course consists of modular technologies that will experience learning rates as well. It's still hard to say in early days to really get that cost curve decline of where recycling is going. But what we're seeing is we are seeing new technologies and new recycling methods coming to bear that are actually driving up the competitiveness. So here we're looking at the relative profit margin of different recycling technologies across regions, from the incumbent technology to the new scaling entrance of hydro recycling and direct recycling as the current most promising option for more profitable recycling operations. And so we do see slowly this trend appearing. It's early days to really be conclusive of what the trend is here in the long term, but we do see new technologies coming in and recycling ramping up fast in competitiveness. On the next page, we see that recycling is also ramping up by capacity very rapidly. The announced capacity, this was, I think it was from the IEA report and from March 24, actually would have us go to roughly 1.5 terawatt hours per year, 1,500 gigawatt hours per year, as shown here, of capacity by 2030. This is the announced capacity there is today. And if we just look at the available batteries that will be there for recycling through to 2030, even in a faster scenario of battery uptake, we would only get to roughly 50% utilization of this capacity. It is going very fast on the battery recycling front. Anyway, let's take a step back on the next page and summarize these three big levers. So as we follow the continued trend, so we have continued changes in chemistries, energy density keeps improving, and recycling comes in. You actually get from this sort of exponential, this sort of S-curve outlook into much more of a U shape, where we actually start seeing a peak in roughly a decade from now. Lithium a little bit later, around 2038. Nickel in a decade from now, 2034. Cobalt might even be earlier than 2030. And so across the board, we see a peak in mineral demand. And that means if we go to the next page, we kind of take it back to the start of this section, as battery demand goes up this S-curve in a fast or faster pattern, we won't actually see mineral demand growing in a fast or faster S-curve pattern, but much more in some sort of a U shape as we take the minerals out of the ground and then can go into a more efficient and circular battery system. And as shown here, the faster we go, the higher the peak will obviously be, and typically also the earlier the peak will actually come. And so in a faster scenario, the peak might already actually, for instance, for lithium, happen in around 2030. Good. That was the continued trend outlook. But as we know, as we've learned anything from the energy transition over the past 2 decades, it's that action begets action and change begets change. And so what we did here is on the next page, we modeled a scenario where we actually looked across all 6 of these levers, not just the top 3, and said, what is actually a reasonable assumption for change in this bucket? That would actually, that would actually result in significant impact, but also would just be kind of reasonable to see as a pathway going forward. So that means, faster scale up of sodium batteries when it comes to chemistries. It means higher recycling collection rates in line with leaders in recycling rather than just taking global averages going forward. More efficient vehicles, more mobility. We took a wide range of levers here, none of them really out of the ordinary, but more plucked from examples where we see feasible examples that we see. And we modeled those through. And so if we model those through our stock and flow model that we built up, on the next page, we actually see that at the top line now is the continued trend that we just discussed. And now we see that on top of that, if we have accelerated chemistry change, faster energy improvements, accelerated recycling, and then on top of that, longer lifetimes, efficient mobility, efficient vehicles, you can actually repress this peak of mineral demand by almost 40–50%, depending on which mineral you exactly look at. So you can do a lot more by pulling the full set of levers. And so one other thing I think comes up here that's quite interesting. You see it for cobalt here already. In the accelerated trend, you actually get to zero net demand for minerals. And there's an interesting effect going on is when we take recycling and circularity and battery innovation seriously, we can actually reach circular self-sustainability. And this is what we show on the next page. So if we just follow the path of a mineral here, it is taken out of the ground today and put into a vehicle in 2025. Then that mineral lives in that battery for about a decade. It's probably going to be longer, more like a decade and a half under battery lifetimes, but let's say conservatively a decade. Then it can go into a recycling facility at its end of life in 2035. Roughly, if we look at collection rates and recycling rates for minerals, we can roughly get to 6 to 10% recovery rate in a recycling facility. And so that means that coming back into the loop, the secondary supply coming in is roughly only 6 to 10% lower than it was before. So the only thing we really need to do is after a decade is make sure that the new mineral demand that goes into a new battery is 6 to 10% lower than it was a decade earlier. And that is entirely feasible. Over the past decade, we have improved the amount of minerals that go into a battery by 25 to 50% over a decade. So 6 to 10% should really not be a number that we get too shocked by. And so bottom line, circular self-sustainability is entirely possible if we believe that A, we recycle properly and we use the latest available technology to get that collection and recovery rate losses down. And at the same time, we continue to push innovation and efficiency such that after each of these battery loops, you can actually use fewer minerals to do the same thing. And so what does that mean? On the next page, I think we show really the bottom line of this, which is these minerals will all go through a one-off mining spree. So we're looking at net mineral demand across the different minerals. So we do lithium, cobalt, and nickel, but we also show, for instance, aluminum, phosphorus, iron, and manganese here. Just as an example, if you start recycling and take this seriously, this is not a S-curve growth that is perpetual. This is also not something that plateaus. If we take circularity seriously, we can bring mining to a one-off stint that will happen over the next 20 years before we hit net zero mineral demand by 2050. And that means we can hit net zero emissions in transport at net zero mineral mining before 2050 already. So that's really big. Let's talk a little bit about the implications of that next. The main implication, the main realization that we've had from this piece is that battery minerals are not the new oil. And this is, I think, the page that describes that best. On an annual basis, we extract roughly 2,000 million tons of oil every year just for our transport system. It's almost double if we look at all oil. This is just for our transport system. This is what we pull out of the ground. That costs roughly $1 trillion per year. If we compare that to the mineral demand that is needed to get to a circular state, so this one-off mining spree that I spoke about, if we compare that, we see that we only need 125 million tons of minerals to be taken out of the ground. Maybe if we include all the mass of the other elements in the ore that would get transported of a mining site, be a bit more. And that in total would also cost roughly $1 billion. But that's the comparison here is an annual cost of $1 billion versus a one-off cost of $1 billion. Battery minerals is just, in terms of mass and in terms of cost, much, much cheaper than maintaining our oil system. So let's take a little bit, let's focus a little bit more on mining here. So let's think about the actual capacity. So we're working up towards a peak in battery mineral mining. Looking at the announced capacity today across lithium, cobalt, and nickel, we actually see we're edging very close on getting to the battery mineral peak across lithium, cobalt, and nickel. Only in lithium do we still see a significant gap there. Of course, announced capacity doesn't always mean, of course, that this capacity will actually be realized. So if we look at the maximum here, where we actually go a little bit slower than in our accelerated scenario, we just follow the continued trend. There's still some small gaps appearing here, and there's still some risk that we cannot meet the peak. But of course, as we start taking circularity more seriously, we can actually bring this maximum bar down much closer to the minimum bar. And at that point, it becomes quite clear that if we do well converting announced capacity into real capacity of mining, but at the same time, we convert sort of ambition on efficiency into reality of efficiency, we can close that gap over time. And this is really, I think, what the main implications is for mining demand here. Is so far we've only been fighting with one side of the equation, increasing mining. With battery circularity, we start fighting with the two sides of the equation, where we also lower the actual demand. That's the capacity question. Let's focus now on the volume. So we can see we can meet capacity. How about the amount of minerals that we actually need to take out of the ground? So we already have the reserves. We already know we have the reserves to get there. So if we look at the total reserves for lithium, for instance, we see that we probably only need just over a third of total minerals that we know are out there to have a successful battery transition, but also a transition across other sectors, which is, we take this the outlook here from the IEA. Even if we would not go along an accelerated trend, but just follow the continued trend, we'd still be well within the budget of the reserves that we have. I mean, it's even so extreme as to say that if we take circularity well, we could almost fit, especially when it comes to lithium and cobalt, almost 2 energy transitions into the budget that we have. And there's an interesting thing here, because these are the reserves that we know of today. If we go to the next page, we see actually that the more we actually start looking for these minerals, the more we find. Compared to the year 2000, the amount of lithium, nickel, and cobalt is somewhere between a factor 2 to 3 times higher than we thought back then. And the more we start looking, the more we actually find. And then on the next page, we show the more that we find, the more we plan to mine. Mining capacity is ramping up very rapidly. This we're showing here the lithium mining capacity outlook from BNEF from 2019 to today, up by a factor 2.4. But all this mining, as we said, it's not the same as the system we had before. This is a one-off mining spree that we're building up for, and it's not the same as oil. I think on the next page, there's another interesting insight that really shows how a battery mineral system will be different from an oil system. So about 80% of the world today is oil dependent, oil import dependent. And that means that in an economy where you're dependent on oil imports, when that import stops, your entire economy comes to a grinding halt. Your engines run dry within days, and basically your entire GDP growth and GDP comes to a halt. As we shift into new clean technologies, of course, there's still dependency on imports. But when imports stop, your existing solar panel on your roof, your existing battery in your car, you can still keep operating. That means that basically you de-risk to a large extent your GDP. The only risk that is left is of growth, because of course you do need new energy technologies to grow your economy. Now, this is where circularity comes in to fully de-risk your energy system. Because if we move towards circularity, we can actually keep running the existing economy on the minerals that we have, even when batteries and solar panels and other elements come at their end of life. You can just recycle them, and you can even power most of the continued growth. And that means we move from a system that is in the oil setting on an immediate basis at risk of import stopping, to a system that's probably on a decadal basis at the risk of the economy stopping when imports stop, to a system that's probably on a century level risk of stopping when imports stop. And so there's a huge advantage to moving from oil in towards minerals when it comes to security. That's not the only benefit. On the next page, there are many more benefits that come from pursuing a circular battery system. Here we focus on a couple of the compounding benefits that we see when we look at pursuing efficiency across the board here. So obviously we know the emission story of avoiding emissions when we switch to EVs, but there's an equity story, a security story, and a health story as well. You have cleaner air, lower dependency, as we spoke about, fewer fossil fuel harms and inequities. But as we actually take efficiency more seriously and we move towards more efficient vehicles and more efficient mobility, you actually get these compounding benefits on top that result in overall a very high return on social investment. Countries are starting to pick this up. On the next page, we show, again, the outlook for battery recycling that's being built up, but now split by countries. China is decidedly currently leading this race, this circularity race to the top. But the United States and Europe are getting plugged in very rapidly as well. Battery recycling capacity is scaling fast, as these benefits are just, I think, I would frame too good to not exploit. Change is happening fast. China is ahead, but don't be fooled. We're only about 10% into this full race. So at the moment, we have something between something around 1.5 terawatt hours of recycling capacity planned per year, but we'll at least need another 8, 9, 10 terawatt hours per year capacity through to 2050 to meet our final system. So China is ahead, but we're only very early into this race. And in all of this, let's not count out the incredible role that the Global South can play. And on the next page, we show an example of this. Of course, a lot of batteries will be caught within cars, and a lot of end-of-life cars or almost end-of-life cars are traded second, third, nth hand from the Global North into the Global South. And that means that the Global South will have a unique role to play in this transition as well, as many of these batteries will actually end their life in the Global South. And that means we will get to a completely different economic trade flow, where today it's mostly mining, Global South, a bit of Global North as well, up to the Global North to make technologies. Then there's technologies when they're close to their end of life get exported back to the Global South to end up on scrap heaps. And now in the battery system, we completely transform that and have actually a circular system where at the end of life, these batteries that are caught within vehicles can actually be exported back into the Global North, either for its contents or already as recycled black mass or whatever one can imagine. This circularity loop, this loop is not just one of the value chain, but it's also of global trade flows back from the Global South into the Global North. So this is the larger promise of battery circularity and a larger promise of setting up a battery mineral loop. The path is clear. We can definitely do this. The question now is, how can we actually get on this path and walk it? For that, I'll hand over to EJ, who will talk a little bit more about that. Thank you.
Yeah, thanks so much, Dan. And also, I'd just like to add my own thanks to everyone for attending today. It is really exciting for me to see the potential that we have through being able to reuse these minerals again and again. But the key, obviously, here is really robust recycling, right? That's what closes the loop and enables us to realize the future that Dan has just outlined. And so to do that, we need technologies, policies, and markets in place to ensure that battery recycling is economically sustainable. Now, the good news is, especially on the technology front, that the technology exists today and it's improving constantly. Just 2 weeks ago, I was at the NatBat annual recycling workshop up in Montreal, and it was really exciting to see all of the progress being made by startups and established companies alike, really starting to bring innovative technologies online out of the lab into commercial scale facilities, and the constant innovation there. But nevertheless, at the end of the day, we have to ensure that there is a strong and durable business case for battery recycling. And so I'm going to walk through some points around that now. Next slide, please. So I'm going to start by exploring what are some of the key barriers to battery circularity and what RMI is working on to address that. Then explore how we've applied a triple bottom line accounting approach to battery recycling, and finally, a few thoughts on potential interventions. Next slide, please. So as Dan showed earlier, there is certainly an excess of recycling capacity today relative to demand at the end of this decade, and that is if a majority of projects that are announced actually come to fruition. But there's a number of other key things that are still missing, and that is robust collection, reuse, and repurposing capabilities for batteries. Also, beyond the 2030s, because EV sales are going to continue to grow exponentially, we do need to bring on substantially more recycling capacity. And Dan pointed that out. We have maybe 10% or a little more announced and being built, and still 90% or so to go. But also, and perhaps most critically, we need domestic capacity in the midstream of the supply chain to actually use those recycled materials. So the midstream is the part of the supply chain that takes the processed batteries and turns them back into battery grade components, and ultimately the cathodes that will go back into new battery cells. And we just don't have that in the US right now. Second barrier is the sheer number and diversity of stakeholders in the EV ecosystem. They often have competing interests, whether that's within their own cohorts, so different types of recyclers having different goals and priorities, or across cohorts. For example, recyclers and battery reusers competing for the same feedstock. Also, today, the supply chain is very opaque. You can only manage what you can measure, and the lack of system level data is really impeding stakeholders from making the best policy and investment decisions. And lastly, the financial, social, and environmental return on investment associated with battery recycling is really not clear today. And this, I think, prevents people from taking decisive action. And so RMI launched the Battery Circular Economy Initiative to help address some of these major barriers. All right, so 4 things that we are trying to tackle within this work. The first is that we provide stakeholders with the data that they need to make informed decisions. In January, we launched the BCI dashboard, and this pulls together data from a variety of disparate sources into one clear and holistic analysis of the battery supply chain and its path towards circularity. And later this year, we're going to be adding some enhancements to this dashboard that will include some of the results that I'm going to share here. The dashboard is user interactive, and it can provide both granular and big picture data and insights about the US battery supply chain. Users can create their own scenarios through a variety of different inputs, and then from that, get a number of outputs. And they include what will battery demand be through 2030? What are the supply gaps in every step along the supply chain, from the mine right through to completed packs? What's the available amount of end-of-life battery materials, and to what extent can those materials meet those supply gaps? What is the financial value and emissions benefit of recycling all those batteries? And finally, a metric that we call the circularity index, which quantifies how circular the EV battery supply chain can realistically be based on the user's understanding of a particular region's recycling ecosystem. And so the goal of this dashboard is to help battery stakeholders easily quantify the opportunities, gaps, and system level benefits associated with circularity. The second piece is around engaging stakeholders in order to develop a shared understanding of the challenges facing the battery supply chain and the ways in which we can address them. So we work with stakeholders and solicit input and peer review from experts across the industry and around the world, not just in the US. And we also help make connections between the private sector, nonprofit, and government, because we really need all boats moving in the same direction in order to realize the circular economy for batteries. Third is support for the development and implementation of robust data-driven policies. And this connects back to the dashboard that I mentioned earlier. And lastly, we seek to guide the investment efforts and that can help foster circular infrastructure, and by extension, strengthen the battery supply chain. And that's where I'm going to focus on today. What our analysis shows around how battery recycling can bring greater value to the world. Next slide, please. So now I'd like to dive into how we've done what we believe is a novel application of triple bottom line accounting to battery recycling in order to be able to understand its full value. Next slide. We really need to look beyond just the financial returns from battery recycling in order to account for all of the social and environmental value that it can create. If we look at only the financial piece, this is really only looking above the waterline, and there's a lot more below the waterline. And so only when we consider all of the externalities, both positive and negative, can we really understand what the true return on investment is for battery recycling. And this helps enable a more targeted viewpoint on where battery investment and policy are needed in order to create the most impact. Next slide. So to do that, we set out to develop a framework that can quantify the financial, social, and environmental impacts of battery recycling. We define 5 metrics across those 3 dimensions. On the financial side, we look at profit pools for EV battery recycling. And so this is the total profits earned at all points along the battery supply chain through recycling. For social metrics, we looked at the wages that will be earned and the GDP impact of those jobs created. And on the environmental side, we look at CO2 emissions, water use, and land use all converted into dollar values. So I'll go into a little more detail about that now. Next slide. So within the profit pools, we evaluated the value and quantity of recoverable materials from recycling feedstock, how much it costs to acquire that feedstock, and then what are the costs to build and operate these recycling facilities. In terms of jobs and economic impact, we looked at what are the number of jobs in shredding and refining created over time, the average wages earned for those jobs, and the additional economic impact that can come from those wages being earned. Next slide. Now, on the environmental side, 3 categories. First is emissions avoided. So we looked at the CO2 emissions from recycling, compared that to extracting virgin materials, and we valued those emissions based on EPA's social cost of carbon. For water, we looked at the fresh water needed for recycling, comparing that to mining, and then valued that water based on the price per gallon of water in the geographies where these processes are likely to take place. And lastly, for land, we looked at the land required for recycling compared to mining and valued that land according to the value of pastoral land proximate to where mining and recycling is likely to take place. So all of this together gives us a framework for calculating more holistic return on investment. It certainly doesn't include everything. There are more impacts that could and should be accounted for. The most obvious omission here are human right impacts. But nevertheless, we think that this does create a more clear and complete picture of recycling compared to mining. Next slide. So we use these 5 metrics that I just outlined, and we compare that to the linear supply chain for mined materials with US-based battery recycling. And for the recycling side of the analysis, we focused on an integrated hydromet recycling process, which assumes that shredding and refining take place in one facility. And although it is true that today most recycling scrap gets sent to facilities that utilize a pyromet process, this has disadvantages, for example, greater energy intensity and also losing the lithium and graphite through that process. And so there's a lot of advantage to the hydromet process. It also seems clear there's a lot of investment moving into that space. And so there's no doubt that hydromet will play a big role going forward, and that's why we chose it for this analysis. The chart here shows the process flow that we used and the resulting products that come out of that, specifically lithium, cobalt, nickel, and manganese. We chose these 4 metals because they're key to the recycling process as it exists today. They're also the 4 that have the highest value coming out of recycling. We eliminated aluminum and copper primarily because it's not captured very well in the current research related to battery recycling. And lastly, I'll note that the 4 chemistries that we evaluated in terms of the feedstock were 2 flavors of NMC plus LFP and NCA. Next slide, please. So as we look at the profits now, the profits depend on the residual value of the metals that come from recycling. And that is a function of where the metal market is on the day in terms of prices, and that can range quite a lot, as well as what was the battery composition coming into the recycling process. On the cost side, this depends significantly on the economies of scale. Bigger facilities do a lot better in that regard when it comes to battery recycling, and also the upstream design of the battery. How easy is it to collect and disassemble? And our conclusion is that the investment case for battery recycling is mixed. It can definitely be profitable. It might not be in certain circumstances. Either way, today it's definitely not as strong of an investment case as mining virgin materials. So what can we do about that? Next slide. Well, the picture is very different when we consider the social and environmental returns with recycling. This chart shows the cumulative value of all batteries that will retire in the US by 2040, including the monetary value of the environmental and economic benefits. And the key finding here is that even when metal prices are low and battery recycling economics may be challenged, the triple bottom line return is overwhelmingly positive. And so we need to ensure that the investment and policy decisions are made that enable us to capture all of this value. Next slide. So to explore the uncertainties and help bring this framework to life, we utilized a set of case studies. We used 3 different case studies to compare the value of extraction to that of recycling. We focus here specifically on lithium because it's a metal that's common to all EV battery chemistries today and definitely for the foreseeable future. And the results are based on LFP in this instance because of its increasing adoption and how important good recycling will be for LFP in the future. So we start with a baseline of mining, which is the most resource and polluting process in terms of extraction. We then compare that to direct lithium extraction, which leverages geothermal electricity generation and has the potential for some pretty significant benefits compared to hard rock mining. And lastly, compare both of those to recycling. And all 3 of these, in this instance, are using US numbers for an apples to apples comparison. Next slide. So the chart on the left here shows each of these 3 production pathways in both a high and low metal price scenario. And today, mining is always more profitable, and it will continue to be so unless we make some changes. And that's because the floor of metal prices is set by mining, and the recycling business model can really be challenged when metal prices move towards that floor. And even when recycling is profitable, it can have a hard time competing in the market because investors will still get greater returns from mining. So to realize the positive externalities of recycling, we need policy and market interventions that help support that. So one example would be the potential impact of the Inflation Reduction Act's 30D tax incentives. Now, this is nominally aimed at consumers, but it doesn't indirectly impact or target recycling because recycling material qualifies as domestic content. And so 30D provides approximately $7,000 per ton of battery in a vehicle. If only 1,000 of that were allocated to the recycler, the profit margin can turn positive and create a really strong business case. Other ways to support recycling include things like extended producer responsibility, recycled content mandates, or voluntary measures like creating a strong market pull for responsibly made batteries. And I saw a question about that in the chat. We can come back to that. So next slide, please. I'll conclude with a few thoughts on what are some potential interventions here that could support battery recycling. Next slide. So I think when we have a clear assessment of the costs and benefits available, it's a lot easier to imagine how these system level interventions could help overcome these barriers. And I'll point out 4 for today. The first is clear requirements for safe handling procedures for end-of-life batteries. This reduces uncertainty, risk, and time, and therefore cost of the first steps of battery recycling. The second piece is traceability. This is a bedrock of information sharing that helps identify and reduce risk, understand the provenance of those materials, and reduce the risk of unethically sourced materials. Policy incentives and voluntary measures, such as creating a strong market demand for recycled products by large corporations, is a way of supporting this nascent industry. And lastly, we see really exciting emerging innovations in things like direct recycling, chromatographic separation, significant efforts around second life and reuse, and all of these innovations require continued support in order to achieve a fully circular battery supply chain. And so with that, I'll close on the next slide. If you'd like more information about the work RMI is doing in this space, or to explore the battery dashboard that I explained earlier, please check out this QR code. And now we'll transition into Q&A.
All right. Thank you both. We have more questions than we have minutes. So we will do our best to answer as many as we can. But we appreciate your patience as we try to combine and consolidate and respond to as many as we can. We have many people, including Duncan and Madhav and Charles, interested in the national sovereignty angles of critical minerals in circulation. So, for example, talking about exports and whether countries will be looking to retain these minerals versus to export them, or ways that countries can become more self-sustainable and self-reliant. So it may be done first, but let's hear from anybody who has a thought on that.
Yeah, thank you, Will. You have a bit of an echo on your end, by the way, just so you know. So it's an interesting question, right? So at the moment, most of trade policy is focused on what flows into a country, especially when it comes to material flows, oil imports, mineral imports, technology imports. That's where a large part of the focus is on. Also, we talk about, for instance, the trade barriers that we're seeing appearing across the world and the trade tariffs that we see across the world. They're all focused primarily on imports. Now, what becomes quite interesting, of course, in a battery circular system is that the value of a battery doesn't only exist at the start of life, it also is very much at the end of life. So as the value of batteries go up, not just at the beginning, but also very much at the end of life, where at the beginning it's more for the value it can deliver, and at the end of life it's probably more also for the security it can provide for your country to keep that mineral within your region. I think there might be some moves that we see of actually shifting this perspective of, to some extent what we see in the US, keeping batteries out to some extent at the moment, to actually keeping them in and making sure that once you have these minerals in your countries, you will actually not want to have them leave. And so we're very early days in this transition. And I think we're still, the other shoe still very much needs to drop with people to understand what circularity actually means. But once that happens, and once these insights of a peak and a peak in battery minerals and net zero battery minerals within sight becomes clear, I think we will see some changes in policy.
Great. Speaking of policy, we have a couple of questions also from Grayson and Diane about US state and also federal policy. So what is the role of these levels in solving the challenges that EJ outlined? What might be some specific policies that both states or the federal level can enact?
Yeah, I mean, there's a lot to unpack there, but I think to keep it relatively brief with the time that we have, most actions in this space are best done at the federal level because the supply chain itself is really global in nature. And what we need to avoid is a balkanized approach where we have 50 different approaches to any given thing. So at the federal level, this includes obviously support on the R&D side. As I mentioned earlier, there's a lot of emerging technology that really has the potential to lower the cost of recycling, and we need to ensure that that is thoughtfully developed and able to be brought online. Similarly, support for the midstream, as I mentioned, right now there's a lot of investment coming out of the IRA in the battery production space, but not so much in the next steps upstream from there. And I think that's a place where the federal government really needs to lean in. And then also on more mundane things like the safety and handling requirements for end-of-life batteries. Right now, there's a significant degree of uncertainty there, and that adds a lot of cost and time in just the logistics piece. In fact, the logistics can be up to half the price of recycling a car battery today. And so if we can come up with better standards to help facilitate that, it could really lower costs. And this is definitely something that EPA and DOT are working very hard on right now. The final point would be around requirements for the battery end of life. So is this an extended producer responsibility? Is this recycled content mandates? Other regulations that tackle the flow of batteries at the end of their life. Now, I'm not sure where we'll be able to get at the federal level there, and this is perhaps where states could lean in. However, I would caution that I think that effort, if it is going to happen at the state level, needs to be done in a really thoughtful and coordinated way so that the industry is not trying to meet a whole bunch of different standards across the country. All that'll do is slow things down and drive up cost.
All right. Thanks, EJ. Okay, we have a few people asking about risks. So what are the biggest risks towards towards the circular future and making possible scenarios that we saw in Dan's presentation? Lisa is asking about risks for higher battery demand. Gaurav is asking about Jevons paradox, and we have a couple others asking about different facets of things that might not happen as well. So I'm curious from you both or anybody, what are the biggest risks you see that we have to overcome towards getting to this future?
So I'm sure EJ, you have a much better granular view, but let me start with an observation from more distance. I think the biggest risk, to be honest, is actually a very simple one. And I saw it coming up in a couple of questions as well. The biggest risk is actually not realizing the opportunity at the moment. This is the biggest risk that we see in the system. People still have a very outdated view in their mind when they think about battery recycling. There's this number of 5% in their head that arose from roughly a decade ago, and a bit of mathematical misinterpretation of analysis, and that kept being reproduced and referenced, etc. Not understanding how high the recovery rates can be, how good collection can be, what the opportunities are of battery recycling. So I think actually at the moment, the biggest risk that we see, and that's why we also are so keen to get this report out there and have you all on this call help us spread the word on this. The biggest, at the high level, the biggest risk is the fact that people don't realize the actual opportunity that is there, and therefore don't believe that this future can happen, and therefore don't invest in it. And that, in the end, I think is the biggest downside or the biggest risk that we see at high level.
Yeah, and I mean, from my perspective, just real quickly, I think the economics of recycling are the key risk. Recycling works really well when it makes economic sense. Right now, I think a lot of people don't know this. Right now, 85% of cars by mass is already recycled today, and that's a completely unsubsidized business. It takes place across more than 10,000 auto dismantlers and recyclers across the country. They use parts that they can refurbish and resell. They recycle what's left, and most of the material in your car today is recycled at the end of its life, and that happens because they make money doing it. If we can facilitate a similar outcome when it comes to EV battery recycling, this problem becomes a lot easier, and we will much more easily move into this realm of circularity. But we got to figure out a way to bring costs down, make sure the right policy is in place to enable a robust business model for battery recycling.
I'm going to jump into that a little bit and bring up something that EJ mentioned during the presentation, the sheer number of stakeholders along the value chain. You will have a variety of players who will play a part in the manufacturing and in the end of life part of the value chain, because these require different skill sets and different business models. But what we need to make sure that is that all of them are working in a coordinated manner as compared to protecting their own interests. A lot of the cost of recycling or circularity can be reduced if we make changes to the upstream design, and that lies with the manufacturers. And if manufacturers can see a way of realizing the benefits from the circular value chain by working with the end-of-life value chain players, we can drive a more coordinated approach that can improve the economics of circularity.
Great, thank you, Sud. And for those who don't know, Sue was also a report along with me, an author on this report that was with Dan. So we all were in this together. We're seeing questions in the chat also about competitiveness, particularly with the US and China. So let's see the question from a couple people on, is China too far ahead already? And what can the US do or other countries do to catch up in the race towards circularity?
China's definitely ahead in terms of the buildup of recycling capacity, right? It's also ahead, I think, to some extent in its thinking and its realization of the potential of a circular battery mineral loop. It's CATL, I think it was a couple of weeks ago, or I think it was a month and a half ago, coming out with 2042 as a date where China could become mineral independent. That's how fast recycling is ramping up. That's how fast innovation is going. They are betting on early 2040s mineral independence and basically circular self-sustainability after that. That is really significant. But as we show in our presentation, right, we're early on in the race. Once the West starts realizing what the next race in the mineral, in battery minerals is not about mining, but about recycling, catching up can go really, really fast. Innovation in the West is rampant on battery recycling. We see, I mean, you see kind of this running gag, right? Every other week, there's a new battery chemistry coming out. It's almost like every couple of days, there's a new recycling innovation that I see in the news. It is evolving really rapidly, and we're still so early on in the race that it's way too early to call.
Yeah, I would agree. I think the moment is now, though, for decisive action. We absolutely need to make big steps forward over just the next couple of years, and then I think we can be well positioned. But if we hesitate, if we drag our feet and get caught on the back foot, then it could absolutely play out like, say, solar panels again.
And this is the direction of travel. I'm speaking to a Canadian friend who's really into his ice hockey. I think the best analogy I've heard on this is like the direction of travel for battery minerals is towards circularity. And right now the West is skating towards where the puck is, not towards where the puck is going. And so going all in on battery mineral mining is basically a good strategy 5-6 years ago. Today, the strategy needs to be much more diversified and aimed towards circularity and efficiency, as that is really where the match of battery circularity is going.
All right. Well, thank you both. We are just about out of time, and deep apologies again that we couldn't get to all 37 questions, but we tried to include as many as we could, and we can perhaps follow up with certain people after the webinar as well to answer more specific questions. Thank you again for joining. Everything after the webinar will be available within 24 hours on the event page. So if you go to the QR code that is on the screen or to the link in the chat, you should be able to access the PDF version of the slides, as well as a recording and any other information. There's also several links on this slide, including the emails for Dan and EJ. And you are also welcome to stay in touch and stay up to date with things that RMI is putting out by getting on RMI's overall newsletter, as well as the Renewable Revolution Substack that Dan and the team put together as well. So that is most of everything that we need. So thank you all, and feel free to be in touch with follow-ups. Otherwise, have a great day.